Good morning, good afternoon, good evening, everyone, and welcome to our festive edition of AML Watcher's most recent webinar, Making Synthetic Data Work for Transaction Monitoring. If I could say, maybe Erik, first to you, if you were going to develop a 3 to 5 year roadmap to a data-first model within the institutions, what would that look like to start with?
So first of all, I mean, we've obviously been talking a lot about rules here, and I think the 3 to 5 year roadmap would move away from a rules-based approach, as effective and intuitive as that is, to a more AI based approach, where basically you just like other areas of AI, you throw a lot of data at it and the AI figures out what are the interesting patterns. And just if I could give a quick analogy, American Express and trying to detect credit card fraud, if you go back 20 years, they had a set of rules like we're talking about here. I mean, if you're making purchases in the middle of the night, it's more likely to be fraud than if you're doing it in the middle of the day, that sort of thing. In 2012, they moved to an AI based system where they basically threw a lot of data at a model and trained it. And they found, first of all, they got an immediate 40% boost in accuracy. And then they found it was also much more adaptable. I mean, every week or every month, you feed in new data. And so new fraudulent patterns that are emerging, you immediately get. And I say that by way of both encouragement and analogy in terms of the 3 to 5 years. I think we should be moving on a similar sort of a trend here. And so I think synthetic data plays a key role in being able to develop these AI models and keep them moving forward.
Absolutely, absolutely. And Pallavi, any kind of final words from yourself in respect from an industry perspective? One of the things I've recently, and in fact, even yesterday, I was speaking with two of our industry colleagues, with Alex Woods and with John Paul Eaton, was around the fact that we need more diversity of skill sets at the table. So we've talked a lot about data here. We've talked a lot about kind of what we can do better with technology, but we do need diversity of skill sets. So, and Alex Woods' situation, obviously, this is a previous fraudster who now works with government officials and works in the industry to help identify scam typologies and raise awareness. What are we not doing good enough at the table and why are we not bringing enough diversity in our skill sets into the room to help us innovate better in terms of identification and also with technology builds?
I can always put that point to the culture of silos, which has always been existing in the financial crime industry since the time I've started. So it is high time that all the KYC teams and the onboarding teams start working together, and KYC and fraud should be sitting together and start chatting up with each other as to what is actually happening, what are they seeing on onboarding. And if they have stopped somebody's onboarding, do they actually have the reasons why they have stopped that onboarding? Are they going and sharing that data with the fraud team? No, it is still not happening. On the fraud side, fine, they have stopped some payment, or there's a victim of fraud, they have logged a SAR, it comes onto the AML desk. But again, are these two teams speaking to each other? Not all the banks. Happens only in the small teams and the fintechs currently. But again, when you put it to the high street banks, 4 to 6 banks in the UK, again, it goes like a siloed position for there. So so they should actually start merging the KYC fraud together, get the AML team as well. And sanctions used to always be the last, but given so many developments in sanctions should be coming up first now in any financial crime operations or something at that stage. So I can again put all the blame just to be on silos, and these departments need to start communicating, talk to each other, conduct your internal collaboration, start your meetings, have a monthly risk forum, and present to each other to say what are we actually seeing, how the bad actors are attacking our bank, and start getting that data together and get those minds. Because I know something in AML, but I don't know what is happening in sanctions. So that person will just boost up my knowledge and say, okay, this happened. Let us get that point on the AML side as well. How will that same point look on the fraud side as well? So this conversations need to start coming in than from the siloed process, which I really hate.
Yep. And last but not least, Nafisa, I would be a myth if I didn't mention, as Europeans, mention AMLA here. And if I'm going to be perfectly honest, in the 180 days, kind of what progress has been made and how how are we currently looking at the progress of AMLA? And one of the biggest opportunities with AMLA was to get the cohesion between the FIUs, the financial intelligence units across Europe, for data sharing into banks to help us to help us with modeling of future proofing and scenarios of financial crime typologies. So I really, if you don't mind, kind of just very quickly, just to touch on that, what more can basically the FIUs and the regulators do to support us with innovation, especially as we look towards future proofing and increasing our technology capabilities, but with the need for real tangible data?
Yeah, because again, I will try to be brief because it's a huge topic that you just
yeah, that's another webinar.
Yeah, it's another webinar. But like as it was told, what we are seeing that we are moving away from alert-based world, and this all is about that, because what would be better to do is look into a behavior-based, intelligence-driven models. And today we detect risk after it appears. We told that about that. But tomorrow we will model behavior before they materialize. So that's why all that is dynamic customer baselines, network-aware risk signals, early stage pattern recognition for scams and mule activity that Pallavi told, all these will mirror their direction regulation are already pushing. Under all these regulations that we mentioned today during our webinar, and we didn't mention also DORA, UAI are completely on a different scale, and all these expectations. But I would say, I just wanted to tell that in synthetic data, it's all great what we have told now. Everything is good. However, they would never they can't replicate the unexpected criminal behavior, because the synthetic data based on AI, they will what does it mean? They just have these patterns, they understand this pattern, they recognize pattern, and they really help. Yes, they help us on onboarding, they help us on transaction monitoring. However, the real synthetic data, the real unexpected criminal behavior, it's quite difficult to capture.
Yeah.
I'm just that's it.
No. It's amazing we said, and and the thing is that it's a completely new webinar, and I wanted to mention it because basically that's the next webinar we want to look at, the first 180 days of AMLA, and what that means for us as an industry. So just to kind of round up today, we are redefining the next decade right now of AI and of AML innovation. The shift that we are facing is not merely technology. It's going to require new skill sets, new governance structures, and a new way of thinking about how criminals operate. But the opportunity is immense. Synthetic data enables a world where detection is no longer reactive, but anticipatory, where transaction monitoring is not bound by history, but empowered by the simulation within our systems, and where privacy and innovation reinforce, not oppose each other, which is something we actually haven't seen to date. So the future of AML belongs to the institutions that recognize one simple truth. Crime is evolving faster than our systems, but with the right data, we can evolve faster as well.